I've studied well over 1,000 hours of ICT trading, and to be quite honest with you, I'm sick and tired of seeing all of these setups that flat out do not work. Everybody keeps teaching the same stuff that does not make any sense and is low probability garbage. And in turn, you guys keep blowing accounts because of it. So in this video, I'm going to save you a whole lot of pain and a bunch of countless hours. And I'm going to be giving you guys my exact setup that allows me and my students to pass funded challenges every single time. And I'm not going to hold back in this video. I'm not going to do any half explanations. I'm going to go in depth and show you guys my exact continuation model so that you guys can copy it. If you enjoy content like this and you want to see me drop more videos, I would appreciate if you guys could hit the like button and then also subscribe. And yeah, like I always say, no long boring intro. Let's get right into it. Okay, guys, so let's understand what this model is actually going to consist of, right? So first thing that we're looking for, with this model is we want to start with a higher time frame sweep plus draw on liquidity, meaning we want to find a sweep of either buy side or sell side liquidity, and then we want to find the next draw on liquidity or the next pool of liquidity that is going to be attacked, right? So we know if we sweep sell side, we then need to take buy side. If we take buy side, we know we then need to take sell side. The next thing is we need to look for a clean 15-minute CISD towards that next draw on liquidity. The 15-minute CISD is going to give us that actual, confirmation that price is going to head towards our draw and liquidity. We want to see a pullback into a 15-minute fair value gap. So when we come back into that 15-minute fair value gap, we're expecting for a rejection back out so that we can trade it higher back in towards the draw. Now it's very, very, important that you enter after the pullback, because if you enter before the pullback, it's a guaranteed stop out. Now, this is something that I stress a lot with my one-on-one students and making sure that they are entering after the pullback, not before the pullback. Okay, that's why they're able to get funded and paid out within 90 days or less, right? If you're interested in working with me one-on-one, you can click the first link in the description. Not enter before the pullback, because we always want to enter after the pullback to not only maximize our risk reward, but it always sucks getting stopped out in a retracement and then watching price go in your direction. We know that precision, comes from waiting for the retrace. Once we've seen price come into that 15-minute fair value gap, we then just want to see some sort of lower time frame confirmation, 1 to 5 minute, either CISD or IFEG, and then we take that trade entry. So it's a very, very simple model, but it's an effective model. So let's understand, why this model works and why it's actually so effective. So a lot of people don't actually talk about, why their model actually works, but like the reason why this model is so effective is because every market has a draw on liquidity, right? Like if we can identify the correct draw on liquidity, and that's like the main focus of this model is like, okay, where's our draw on liquidity? Where is price going to be drawn to and where does it want to go? So as long as we can identify that correctly, we're always going to have a good, understanding on where price action wants to go. Price won't reverse just because we have swept liquidity. And so like that's where the 15-minute CISD is so helpful because, let's say you identify a liquidity sweep and you look for a 1-minute CISD out of it. That, leg still has a high percent chance of, continuing lower or higher, right? But like if we look for a 15-minute CISD, if we see that, that's a very high likelihood that that higher time frame trend is going to reverse and take out the next draw on liquidity or the next pool of liquidity. So that 15-minute CISD is very, very helpful. If the draw hasn't hit yet, the trend continues. So with that 15-minute fair value gap, we know if our draw has not been hit yet, we're going to continue higher to take out that draw on liquidity, right? So like I feel like, the common theme here is like this 15-minute time frame is very, very powerful and very overlooked in a lot of people's models, especially, obviously people who trade ICT. So, if the draw hasn't hit yet, the trend is going to continue. So again, back to identifying the draw. If we can identify the correct draw, until that is hit, we know where price is going to go. How the flow of this is just going to be identify the draw, follow the narrative, and take the continuation setups. Once we've identified the draw, we follow the narrative on where price action wants to go. We wait for that 15-minute retrace, and then we snap on it. Guys, so let's kind of look at a visual of this before we hop on the charts. Okay, guys, so we have a visual here on the screen, a very, very simple visual. So the first thing that we really want to identify is that sweep and that draw on liquidity. So you can see down here, we have swept higher time frame liquidity, whether that's a 4-hour or 1-hour low. So we have swept that. We then want to identify our draw on liquidity, which is going to be up here at these highs. You can see this is where I want price action to push, right? Because if we just took out this low down here, I know we need to now take out highs. Okay, so that was my draw on liquidity. And then I see a 15-minute CISD. So I see that 15-minute shift in structure right there. And again, we do not want to enter up top here. I'm telling you guys are going to take a loss every single time, because what's going to happen is if you try and enter here, your stop loss is probably going to be sitting somewhere around here. Your stop loss taps it, or your chart taps your stop loss, and then price action moves higher. So don't want to enter here. You want to stay patient. Wait for the price to retrace into this 15-minute fair value gap. Once price has a impulse move and delivery out of it, again, looking for some sort of lower time frame confirmation. Let's just say there was an inverse gap right here. Boom. We inverse it to the upside. We take our entry. You could use, this, internal high as your break-even point. And then we're TPing at our draw on liquidity, banking out. Let me make that look like a little money bag. Hey, little money bag right there. But yeah, very, very simple model, guys. This is, something that's so simple, but very, very effective, because we are using this 15-minute time frame, to our advantage here. So yeah, guys, let's go ahead and take a look at an example of this on the charts. Okay, guys, so we have a bullish trade example here. First model that I'm looking at here, as you can see, this is actually later in PM session. You can see that we have New York session low here. Price action comes down and attacks this New York low at the time. We sweep it out. So, what I want to see here is I want to see a 15-minute push higher. So you can see now we have this 15-minute change in the state of delivery right here. Once I have that, I am now looking for a 15-minute fair value gap fill. Mind you, we have to see this 15-minute, fair value gap fill before our higher time frame draw is taken, right? And I understand that price action is going to continue trading higher until we take this draw. So I don't want to enter here. I want to wait for a retrace into a 15-minute gap. So I'm going to start identifying a 15-minute gap, right? So I see one down here. This is just a bit, far from where price action is trading. It's about 170 points. That's pretty far to me. So I see that we have this little itty bitty one right here. Let's see if we can form a better one than that, though. So yeah, we form this nice size 15-minute fair value gap right here. Boom. And then you can see price action comes and taps into this gap. Now, I don't want to just enter because price action is tapping into the gap. I want to look for some sort of lower time frame confirmation. So I could pop into this 5-minute time frame here, and I could look for some sort of confirmation higher so that I know price action is going to take out the draw. So, I personally don't really like to use the 5-minute that much, simply due to the fact that I feel like, it gets me late into trades. So typically I do like to use this 1 minute, so we can pop into the 1 minute here. And I'm looking for some sort of confirmation to enter this trade. So you can see we have a 1 minute change in the state of delivery right here. I would take this entry higher here, and I have my stop loss faded below the low. And then I would be targeting, this, short-term high here. Now, I'm not going to target the draw. I mean, that's just overkill, right? I mean, some people would, but, it's about 245 points away. So, all you need is your piece of the pie, right? So I'm going to go ahead and enter this trade here. And I'm not going to use a break-even point on this because it's only a 1.2. So let's see how this plays out. Almost get stopped there, and then nice. Price action trades right through, and then we TP shortly after there. So I'll be real with you. A lot of traders fail because they either enter too early or they exit too early. They don't respect the draw. They don't wait for real confirmations, and they can't stay patient. And this model fixes all of that because we're looking for the higher time frame sweep paired with the higher time frame draw on liquidity. And then we see that 15-minute confirmation. And then the key here is we need to stay patient, right? Once we stay patient, we see the 15-minute time frame retrace into that fair value gap. Once we've seen that happen and then we see a lower time frame impulse move out of that gap, we can take our entry targeting the opposing draw on liquidity. If you want me teaching you this model and tons of other models in depth to actually get you to where you want to go with your trading, you can apply to work with me one-on-one to get funded and paid out in 90 days or less guaranteed. And if that does not happen, I will send you $1,000 back for wasting your time. Hit the link in the description. Let's get you funded. Let's get you paid out. Besides that, make sure you comment down below what video you want to see next. And I also would appreciate if you guys could like and subscribe. And yeah, guys, I will see you guys in the next one. Deuces.